Just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Hello and welcome back to the channel. Let's have a look at a few charts. The first chart is the one where we marked out the 202-day cycle. Here, I'm not repeating what I often said while price was at the lows in this area. Now we can clearly see that it was a good decision not to be bearish at the lows. However, there are a few things we now need to watch out for. First of all, the people who wanted lower prices while we were sitting at support are now slowly but surely shifting toward the opinion that they predicted this bounce. Because of that, it is time to be cautious. Not because of the move itself, but because this move is happening into resistance. What I marked out here on the weekly chart are simply two scenarios. The first one is price rejecting here, and then I think we move back toward the range midpoint and maybe even the lows. We don't know yet and need to see how price behaves at each level. However, as it stands right now, this still looks like a bottom formation. Now, if price breaks above this area and enters the previous higher range, and I mean this part here, then I can start to aim for higher prices. On the weekly time frame, we can clearly see that if price enters this area, it has found acceptance back into this range. And like with every range, we would then look toward the midpoint and the high of the range. This is a weekly time frame, so obviously price can move above the level and still close below it. That's why we need at least a weekly close above this area. And once that happens, we also don't want to see weekly candles closing below that area again. Simply observe. A retest is fine. Of course, on the lower time frames, price can move down again. But a weekly close above means more than just making a wick above the level. That is the bullish case. Nothing complex, as you can see. So we keep this chart for the next weeks and observe where price will close. Looking at momentum, we can see it has finally shifted upward, while the momentum pivot is sitting at 67K. Technically, price could retest that lower level, but as long as price stays above it, momentum remains bullish. Now, if you ask me what would be better for a breakout, usually it would be better if the move simply continues from here, because each week this momentum level will rise. If price just stays more or less at the same place while making slightly higher closes but not really moving, that could reset the momentum and potentially turn it bearish. I don't think that is the case here, but it can happen if price struggles. Then we would basically go back into range mode. Now let's check the other time frames on momentum. On the 5-day time frame, we see a really nice bullish divergence. Price made a lower low while momentum made a higher low. For the 5-day time frame, momentum remains bullish as long as price is above 65K. Currently, we can also see that price is trying to flip this area into support. We saw a nice candle up, and now we have here a decision point. Here we can also see the last rabbit box setups on spot with 2 entries. Not bad. The lower time frames had a lot of setups on the way down that are still active, but as price started to move up, we also now have higher time frame setups. By the way, if you are interested in this indicator, you can check it out in the Telegram. Now let's move to the next time frame, the 3-day momentum. It is clearly up and remains up as long as Bitcoin stays above 66K. That means price technically could retest that area, but as long as it stays above it, momentum remains bullish. What is locally interesting for us is whether price remains in this area or higher over the next periods. Because if price is able to stay here, meaning holding this level or even moving higher, that momentum pressure can easily create a nice upward move toward the next levels. However, at some point, it could also potentially form bearish divergences. That would happen if momentum makes a higher high while price makes a lower high. Later on, that could lead to a range. But that is still too far ahead right now. For now, we focus on the very next moves. Now we come to the shorter term moves. On the daily time frame, price is currently struggling a bit after that nice rally. Momentum is at the highs but remains bullish as long as Bitcoin does not lose 73K. And 73K is an important level. I will show you that on this chart. If we zoom out, we can see that this 73K area is an SR flip zone. It was previous resistance. Price spent a lot of time there, and we saw multiple rejections from this area. Once price finally broke above it, we saw a big push higher. For now, price spent some time below it, and now we see an attempt to break above it again. The 73K area is more or less the upper part of this SR flip zone. So what we see right now is basically an attempt to push above this resistance. What we want to see here is simple. If price holds above it, that's good, and we look for higher levels, maybe even an impulsive move up. If it fails, then we move back into the range where we have intra-range levels. Now let's have a look at the lower time frame momentum so we have that ready. The 12-hour momentum is at the highs, but already starting to slow down and point lower. That is not a setup on its own, but losing momentum means if price cannot push higher and starts losing support, it can become a confluence for lower prices. Until then, momentum can also just move sideways for some time. Anyway, here we need to observe, because for now, price is ranging. On the 6-hour time frame, momentum is already moving down and remains bearish as long as Bitcoin keeps closing below roughly 75K. It would need a close above this local level to shift momentum back up. If that fails, then this consolidation here could turn into a local top. As you can see, price is making higher highs and higher lows locally. If this is a bullish consolidation, we want to see it continue moving higher. Simple as that. Maybe a sweep of the local lows for liquidity, but then it needs to move up again. If price starts losing this area, the chances increase that this whole move was just another deviation and that we move lower again. So that means if the bulls want continuation, it needs to happen from here. Otherwise, we move back into the range, it takes longer, and we potentially spend a few more weeks, maybe even a month, inside this range. That's it for this local area and the importance of it. Now let's have a look at the next chart, the yearly Fibonacci time and price chart. I also added the FOMC dates here and the daily cycle area visible in green. So here on the price time chart, price is currently hitting some resistance, which is clear. But at the same time, it already broke above the resistance area from before. As you can see, this is more or less the same zone. And now the question for the range is whether price holds this level or loses it and moves back inside the range. If that happens, the next levels would be the range midpoint and the lows. Price has also reached a circle on the chart here. As much as I don't really like it, price could simply get trapped here for some time and grind along that circle downward. If it fails to move higher or lower, then we could see some choppy price action in this area. That would not be the preferred scenario, but we will see. If that happens, I will simply observe this chart for a while and wait to catch the break either up or down. From a time perspective, we don't really have anything important until near the end of the month and around the middle of next month. That would be the yearly Fibonacci time and the daily cycle low time window. That would be a really nice confluence from a timing perspective. The best case scenario would be price hitting some support during that time window. It would be similar to what we had here at the last yearly Fibonacci time, where we expected more volatility and a move to come. As we can see, after the Fibonacci time, we had a nice rise. So the next Fibonacci time will also be important, and I will observe whether we are moving down into that date or moving up, and whether price hits support or resistance at that time. Based on that, we can add it as further confluence. Now, however, today we have an FOMC event. So what I'm looking at is whether we get some rejection around that event. First, we look at whether there is a reversal before the date itself. And yes, indeed, this time we again had a nice reaction before the event and a rise into it, similar to what we have seen in the past. Now, what we also look at is what happens during the event or after it. It's actually quite rare that we just see continuation without any reversal at all. I marked those cases in a purple color. This is when we get a rise and no rejection, but strong continuation. Yes, it can happen, but it is rare. What we see more often is a reaction around these dates. That means price may rise and maybe even spike higher on the event itself, but that then becomes the turning point, and we see the first larger move down. Right now, we have a rise into this date directly at resistance. Unfortunately, we don't have Fibonacci time confluence here, but it is still something to be aware of because this would be the area where a reversal could happen. If that happens, I would most likely wait for price to retrace and move toward the yearly Fibonacci time and the daily cycle time window, ideally hitting support at that time. That would likely be my next action, depending on where price is at that moment. But we will come back to this chart later. For now, as mentioned, price is hitting resistance, and we are moving into the FOMC reversal area. While below us, there is an important SR level that Bitcoin is currently trying to hold or break. And that brings us to the local levels. On this chart, we are looking at the monthly statistics. First of all, we can see that price almost hit the monthly average wick to the upside. It slightly front-ran it, but only by a few dollars. Considering that this is an average level, I can easily count that as touched. Anyway, what we have here for now is that the average time window to form the monthly high has actually already passed. We can see that Monday was roughly the expected day, give or take, and on Tuesday the high was formed. So technically what is happening is that price is hitting some resistance, not necessarily visible on this chart, but on the other charts we looked at before. And at the same time, it also reached the average wick area during the average time window, where highs usually form. That is actually nice confluence for the monthly top, either being in already or being very close to it. But does that mean price cannot move higher anymore, or that price now has to make a new low? Not really. We use these statistics to understand what is possible and to try to time the monthly highs and lows. Yes, based on the averages, this is a nice confluence area for the monthly high to form. But if price starts making new highs, then it would simply mean that price is moving outside the statistical average. In that case, we could still see higher prices. The same logic applies for lower levels if price makes new lows outside the average time window. But we will only know that if it actually happens. Until then, I follow the averages. And right now, they are pointing to the possibility that we might not see significantly lower levels, like a new monthly low, but also not necessarily a new monthly high. It could also be that we see another push up due to news or volatility, but that move would likely run into the next resistance area. And then we would simply need to wait for the next month or the next Fibonacci time window. Purely based on the monthly averages, this would actually be a perfect moment if the monthly high has already formed here. That would mean we don't see a new monthly high, and we also don't see a new monthly low. And price would basically move sideways until the next month when the next directional move becomes more likely. For me personally, that would most likely mean waiting unless something unexpected happens, like a massive breakout to the upside. And I say unexpected because, as I showed you here, the average time for the monthly high has already been reached. So from a statistical point of view, what usually happens after that is simply range behavior, with no new highs or lows planned by the averages. If they do happen, I consider them outside the normal statistical window. Unexpected, but of course still possible. That is basically the view from the monthly statistics. So now let's move to the local levels inside this range. Here we have a few more levels because we are moving into the lower time frames. That doesn't mean I use all of them for trading. Most of them are simply for observing where we currently stand and for looking at the statistical levels for today. But before that, I also want to point out another confluence for the local area where we are right now. Before, I showed you that price is trying to break a higher time frame resistance area, but at the same time, it is also sitting inside a local resistance zone. Now on this chart, we have another confluence for this range high area. This is the range value area high, which is now perfectly aligned with the range highs and the area I marked out a few days ago. So that gives us another confluence for this level, and actually makes things easier because everything lines up with the range high. Simply put, if price moves above this area, we can look for continuation inside the range or even higher. However, I can't really aim for much higher right now because of the average time window that I showed you earlier. If it happens, I'm happy, but I can't really expect it at this moment. An SFP would be fine in my opinion, but clearly if price simply starts making new highs and chopping its way upward, then obviously I would start looking toward the next higher levels instead. In that case, I would not plan to short the move up. For that, I would prefer to see higher prices first or some signs of weakness. And that brings us to the local area. So for now, as mentioned, price could either hold here or break lower. That makes this level interesting for a potential trade. For this, we switch to the 1-hour time frame. And here we are looking at this area where we have the range high, which aligns with the fixed range value area high. It is also the Monday low. At the same time, it is the SR level I showed you on the weekly time frame, and on the yearly Fibonacci time chart, it is also an SR level that price recently broke above. So all of that comes together in this small area. With that said, this is a local level where we can either expect it to hold or, if it breaks down, for price to move lower. In these situations, I also look at the averages for today. What I can see is that the average loss is sitting right here in this area, while the average gain would basically be a retest or a lower high of this current high. Technically, the average time for the daily high is also already reached. That means if price starts losing this area, there is a high chance it could move down and take out all these weak lows that were built in this region. At the same time, this is also a support area, which I cannot ignore. Because of that, I would only really look for a breakdown if volatility starts to increase, at least for today. That can certainly happen, but I also think we could see some reaction once price hits this level. So what I will do locally is maybe look for a few local setups, smaller size setups for me personally. The first one would be a potential short setup here at this local range high. The reason for that is that price has reached the monthly average time window to form the high. But that does not mean I am bearish, because as long as price remains above the bigger range and the SR level, it is technically not bearish. Still, I want to look for a smaller short here, just in case. At the same time, I am also looking for a long in this area, which would also be a smaller position size. I explained this yesterday to the members. If I normally risk around 4% in a range environment, here I would only risk about 1%. So if someone normally risks 1% per trade, this would be closer to 0.25% risk trades. That means if the short or the long gets stopped out, it would only be a small loss, for me around 1%, and for you around 0.25%. I will most likely treat these trades as local scalps, which means I will not be too aggressive with letting a runner continue. However, if price then breaks in one direction or the other, I will hopefully already have a running trade from the local levels. Keep in mind that there is also a risk of losing both trades if volatility increases or if price becomes too choppy. For example, I might get the short and price just moves higher, or I might miss the short and price moves lower and stops the local long. So always manage your risk. Of course, if price breaks lower and then gives a clean retest of this area, I would look to add to the position. That was basically the original idea from the last posts. If price loses this level and gives a setup on the retest, that would be a short with the invalidation above this area. So, for now, a short was not planned yesterday in this area because the high was not confirmed yet. But given the fact that today we reached the average time window for the monthly high, I am also trading these local levels. But as I said, with very reduced risk compared to what I usually take. So if the losses happen, they will not be significant, and the wins will also be smaller. But it can still be some extra money if one of these trades works out, or even both, with one of them potentially becoming a runner, either to the upside for a long or to the downside for a short. The average gain also supports, at least for now, the idea that even if price moves up, it would not make a significant new high if it follows the average. That adds confluence for the short if I get the level here. The hard invalidation would be above the high, but a soft invalidation would already be if price starts moving above the Monday high. Then I would simply trade it level to level. For example, if only the short-term reaction is given, then I would also take profit on the next local SR level, for example, the open range for today. And if it becomes a losing one, then I will look for a move back up and a potential setup on the retest, with the invalidation above this area. Now, I already had multiple wins in this range, around 8 wins, a few small and a few bigger ones. But at some point, I will get some losing trades. And based on my win rate, I expect that. So if there will be losing trades, I actually think this is a good environment to take a few losses here. However, I am going step by step as planned, but with reduced size. I have a bigger trade plan for lower levels if we get them. So my higher time frame focus is still on looking for longs, but those would only be from lower levels or from a real confirmation of a breakout. That means if price is able to break back inside or above the 76K to 77K area, then I can take another local retracement and long toward higher levels. In that case, I would trade the current upward trend while still holding spot and longs from lower levels. That way, I could also make some extra money from the trend. Until that happens, my focus for bigger longs is still on the lower part of the range, which I would be more than happy to get. And that is basically it for today. The plan is clear for me. Local price is above support, which previously acted as resistance, and now it is a potential SR flip. Because of that, I'm looking for a scalp long and potentially a runner. But I would pay myself inside this range to make the trade safer. If the level is lost, I will look for a retest if one is given and short it. If there is no setup afterward, I will simply wait for lower prices and the next trades. And for another short scalp, I am looking at this local mid-range high, which aligns with the Monday high and the local value area high. I would take profits on the way down, and if it fails, I will wait for higher levels. No rush and no unprepared actions. Everything needs to be ready before you take the trade. By the way, if you want a working strategy for yourself, or even just the overall idea of how to build one, I shared one of my strategies. It has a good win rate, but not many trades. However, the trades are usually very big when they happen. You can use that as an idea, build your own rules, and then test and journal your strategy. A lot of people are looking for something that works, and here I give you something that works. Of course, we do not know if it will continue to work in the future, but so far it has been working well. You also get a journal explained step by step, showing you how to make one. Basically, I do it and you repeat it, learning by doing. I am sure it will open people's eyes to what randomness really is and what it means to have a strategy. It can also help improve your own thinking and your own strategy. So I clearly recommend checking it out. And it is not as expensive as many other groups where you basically just get some tools explained, but no clear strategy and no clear history of the strategy being shown. In that video and the examples, I go step by step through the setups and everything around them. I would say it like this. In my opinion, you will miss out if you do not have it. And well, I do not know if the group will grow or not, but it will definitely be limited if enough people join, because I do not want too many people using this strategy and affecting its edge. With that said, you are welcome to join. I hope this video was helpful, and I will see you in the next one.